All right, afternoon, guys. So we went through our training plan in the first session where I took you through the high probability setup. So what we're gonna be doing now is also explain the other blocks briefly. So what I'm gonna be doing now is actually going through some chart examples for you to be able to get perspective on how to approach the market. Yeah? So this is a 4 hour time frame, and I'm also going to open it on TradingView just to give you an example of how to look at the markets or how I'm looking at the markets, and hopefully you can also make use of that. I'll try to make this video as short as I can, so that you can get value out of it. So this is a higher time frame. We say the higher time frame is what? It's the 4 hour chart. Cool. So on the 4 hour chart, for a bullish day, I will look at the chart like this and look, okay, where do I have a recent break of structure? So currently I am using an indicator called swing highs and swing lows. I'll show you on TradingView how to find it. So it will show you where are the swing highs and where are the swing lows on a higher time frame. You can use it in any time frame, but I prefer using it on a higher time frame for me to be able to see those swing highs. So whenever we have a candle that closes above a swing high, that tells me that we have a change of character with a break of structure. I put my BOS there. Then I look at, okay, where did this change of character start from? Where did it originate from? So I see, okay, it originated from the swing low here. So that becomes my market structure low. Then I want to see where price starts to start pulling back into the zone. Then becomes my market structure high. So my expectation is I want to mark my supply and demand. So this is an order block that created this break of structure because it is actually the last bearish candle that broke structure. You can even use this one as the last bearish candle that broke structure. But because we are in a higher time frame, I'm not looking at other blocks at this time. For now, I'm looking at supply and demand zone because these are more refined supply and demand zone. I'm not looking for a refined one. I'm looking for more a sub zone. I'm looking for a demand zone. Or they call it sub zone or a flip zone. But for me, I'm looking for a demand zone. Demand zone. How do I know that this is a demand zone? This is an area where we saw a little bit of consolidation before price broke structure to the upside. This is the high that was broken. So I'd mark it from the high to the low, then this becomes my demand zone. So now what am I expecting? I'm expecting price to come retrace back to this zone, gives me some confirmations from a medium time frame and lower time frame confirmations that it wants to head up higher so that I can buy. So this is again my leg, right? It's my breakup structure, my low and my high. Obviously, what were we doing? We want to buy. So I cannot be buying at discount at high prices because this 50% in would be regarded as premium pricing. So even if price gives me confirmation here, I am not interested because price is in premium pricings. So I want to see confirmation somewhere down here and I want to see it within a demand zone. So this is confluence over confluence to say we are in discount pricing and we are in a demand zone. So as soon as I know that we are in a demand zone in discount pricing, and I'm getting a medium time frame change of character, and I'm getting a lower time frame change of character, I have no choice other than to take this trade to the upside because everything is aligned. Let me quickly go to the chart. So this is a US 18. So to find this indicator, I have it here as my favorite. It's called um, fractal highs and lows. This is the indicator I'll use. I'll then click it once. Then you will see there it will give me this nice zigzag to show me where's my highs and where's my lows. I usually just turn off this in the settings. I will usually just turn off this zigzag. So what do I want to see here? Because let's go to a higher time frame. What do I want to see on a higher time frame? As we can see here, we have a high that was broken here. So you see there's a high broken here. So I want to see where did this high come from. So I see we have a low here and I have a high here. Cool. So now, because structure was broken here and on a higher time frame, I want to see what? I want to see this demand zone. A demand zone, it broke structure to the upside. So now I'm expecting price to what? To come down to this. Sorry, I marked my high wrong here. So it's actually up here. The indicator hasn't shown me the high just yet because it hasn't formed, but typically I'm expecting it to create some high here. But because this is still price action forming, it hasn't really printed, but it's basically going to be somewhere here. So now I'm expecting price to what? To pull back into the zone, into this demand zone, into this 50%. So how do I know 50%? I use a Fibonacci, né? Sorry, wrong tool. How do I know which is 50%? So I would use a Fibonacci retracement. This zone here is 50%. So anything above here, it's called premium pricing. Anything below here, it's discount pricing. So I want to buy in the discount and I want to buy at a demand zone. So I want to see where is demand. Demand is here, and I want to buy within the discount price. So even if price starts turning here, I can't buy because this is premium pricing. I want price to come down here to discount pricing. I want it to come down here to a demand zone within discount pricing. Then I can start looking for those confirmations for me to be able to enter. So this is how I basically analyze the market. I want to see where's my break of structure. I want to see where's my low, and I want to see where's my high, and then I want to see where's my demand or supply zone. Let's go to a back to the explanation. Cool. Then, for a bearish example, now let's say we are in a downtrend. The first thing I want to see is what? My break of structure to the downside. I have a break of structure to the downside. You can even see here, price broke structure to the downside. It came and tested this zone and it went down. So that's exactly what we're looking for. We want to see price breaking structure to the downside, coming back to test this supply zone because we're dealing with supply. Once it start dealing with supply, then it comes down. Let me see if I have the same example here. No, I didn't include that. But this is beautiful because it shows you the kind of setup that we want. We want to see the break of structure. And then if there's a break of structure here, then the high is this one, then the low is this one. All right. So then now once we have a break of structure, we want to see price coming back to this supply zone and then going down. So this is where we start looking for confirmation so that we can enter to this move down. So now it's broken another low. So once it's broken another low to the downside, I mark again my breakout structure. I have my high here, I have my low here. So I'm expecting for price to do what? To start tracing to the upside. You can see it's already starting to test this zone. So I want to actually see it coming into the zone. Once it starts coming into the zone, I want to see some confirmation, medium time frame change of characters, medium time frame breakout structure. Then we target the low down here. So let me just read quickly. It says the red small triangles indicate a higher time frame swing high. Then the green ones will indicate a higher time frame swing low. So the green ones you can obviously customize as you want, but as a default setting, the red ones will represent a high, the low ones will represent a low. So we have a break of market structure when a change of character or a change of character when a candle breaks and belows a strong low or a strong high. So what is a strong low? What is a strong high? All of these highs and lows, they are not created equal. There might be highs and lows, but not all of them are equal. Some of them are strong, some of them are weak. Ne? Okay, so a strong high, it is a is a swing high that broke and closed below a swing low. All right. So this is a strong high. Why? Because it broke this low here. And then, so this one is a swing high that, let's say, it sponsored the move that broke this low, creating the break of structure. This was a previous strong high. Why? Because it sponsored the move to break this low. So whenever a swing high breaks a swing low, the swing high that broke the swing low is considered to be a strong high. Cool. So let's say price, for argument's sake. Okay, let me read down here so I can explain a swing low. So a swing low, it is a low that, sorry, my spelling here, guys. Okay, I can't fix it. That broke and closed above a swing high. Yeah. So here we obviously had a swing high here. We had a swing low. So this is a low. This low pushed price up, creating a break of structure. This is where I can see you maybe looking at this one. It's actually this one, because this is where it originated from. This is where you can mark this one if you want, but this is actually where it is, because it originated, the move started from here to break structure. So this is a a strong low, even though this is a low, but this is a strong low. So let's say, for argument's sake, price comes down. So when it starts coming down, as long as price does not break and closes below this market structure low, we are still in an uptrend. So price can come, test it, even make a wick, come back. As long as it can test, maybe make a wick, as long as it doesn't close below this one, we are still in a bullish market. The trend hasn't changed. So if it breaks below and starts closing below this one, then we have a change of character. We have a break of structure. Our market is no longer bullish. We are now in a bearish market. If now, let's say, I'm expecting price to come to this zone and start going down, but it doesn't, and it breaks through the strong high. This is a strong high because it created a break of structure. The strong high, if price were to break above and close above the strong high, then we are no longer in a bearish market. We are in a bullish market. So you're gonna find that sometimes we might see it in the real charts where there is highs here. You're gonna find that there are some other highs, and then price breaks above those highs. That doesn't mean that now you have a change of character. Does not mean you have a break of structure and the bearish have changed. The bearish trend has changed bullish. You have to wait for the strong high to be broken. If then a strong high is broken, by all means, we are in a buying market. So let's quickly go to the chart and look for a bearish trend here. Let's see a bearish trend going down. There we are. So now we see here in this example, for a bearish move, we have a what? Our indicator starts showing us that we have a break of structure here. So never mind my line. So we have a break of structure here. Price breaks and closes below this low. So once it starts closing below this low, where is our market structure high? Our market structure high is here, because price, this high, sponsored the move that broke this low. This is also a high, but this move, actually the move that broke the structure, originated from here. Yes, you can maybe put it here, but this would be the best place, because this is where it originated, this is where it started. Then we have our low. Where is our low? We can see that price started retracing back at this low. It started making a move what? Started making a move up. When making a move up, it tested this zone, this demand, this supply zone. Yeah. This is actually structure broke. So you have this supply zone. So this is exactly what we want to see happening. It tested it actually broke structure. Where did it break structure? And close below. Yeah, it closed below here. It went, then started pulling back. Never mind this one, because essentially this is, it had not closed, so it probably closed. Then this one came, went down, started retracing back to test what? To test this zone. this supply zone. So this is exactly what we want to see. So once we start seeing this supply zone being tested, this is where we start looking for our confirmation, 30-minute confirmation. When I see our medium time frame, lower time frame, break of structures to the downside, then we trend, we go with it down. We can just either go with it to Kingdom Come, or we want to see, maybe let's say we want to target this low. Let's say we got in here, we want to only target this low. This is a 170 pip move. There's a lot of money that can be made with the 170 move drop, but obviously you can see it went all the further down. Same thing. So this is a trend following strategy. We see that it broke structure here. This becomes our low. This becomes our high. It won't always come back to the zone. So that's why sometimes you might find that price, it doesn't come back to the zone, it breaks structure again. So when it breaks structure again, you rinse and repeat, you just repeat the same process over and over again. I hope it's clear, guys. So whenever you have a break of structure, you mark your break of structure, you mark your high, you mark your low, you mark your zone where you want to see your 30-minute medium time frame change of characters. So in the next session, wait, okay, it's fine. Let's then just read here. It says after a higher time frame break of structure, we confirm a valid higher time frame zone, which we just discussed. Then after the higher time frame break of structure, we expect price to pull back into that zone. We also discussed that. And after higher time frame pullback, we expect price to continue the trend in the direction of break of structure. We also explained that. So in the next session, I'll just show you our medium time frame start setup. So now Gary price in a higher time frame broke structure to the downside. We're expecting it to pull back into this higher time frame POI. What so once it's pulled back on the higher time frame in that supply or demand zone, I'm gonna just show you what do we need to look at for our system. But in the next session, I'll just take you through that